Hi, Dean Jenkins with FollowMeTrades.com, and here's the trade that I like right now. And this is UNG symbol, United States Natural Gas Fund. This is a fund that just follows the price of natural gas, the commodity. And I'm starting here with a look on a weekly chart, and you can see how far this has fallen over the last several years. You can see on a weekly chart where current price at 24.52, Friday's close, is down here absolutely in the noise. So you want to keep this context in mind as we look at a daily chart and look at the trade setup now. So here it is on a daily chart, UNG, and I'm zoomed in pretty tight, and we're just looking at current price action, and you can see at the beginning of the year we had a pretty good spike up here in price, coming from just over $20 up to about 28. That's a pretty good move percentage wise. And now you see it pulled back, but it did not go to new lows, and for a long time it's been making lower lows, lower highs, lower lows. Been in a downtrend. It has definitely shifted. We got a really good high here, a low, did not go to a new low. It channeled for a while. Now it looks like it is breaking out up to a high above the Ichimoku cloud, and it is breaking above the 200, pull back, and now this looks like it could be a really good move. Now I've got my target set just under that last high in case it hits resistance, and I want to be conservative and say if it does stall right there, would this still be, would there be sufficient profit in the trade? And the answer is yeah. We're looking at about a 15 to 20% move, so that looks pretty good. I'll take that. But this could be bigger. This could be, in Elliott wave terms, this could be a wave 1, 2, and we could have a new trend that could go much higher. There's no guarantee of that. But even if it were to stall again at this previous high, it'd be a pretty nice trade. And so my target is set at 26.50. Entry right in here at current price if we're close to that on Monday at the open, and the current stop would be at 23.12, and the stop is set. So if price were to go down to that level, it would break this pattern of high, higher, low, new high. It would be taking out a previous support level, and we want to get out of it at that point. So let me show you how I calculate trade size and the risk management tools that I use as well. So this is a spreadsheet that I've developed that has the formulas embedded to manage risk and to calculate how many shares to trade with and what the loss would be in a controlled loss if the trade were to fail and hit the stop. And so I post all my trades to my subscribers on this one. I'm showing UNG, and this spreadsheet's available for you to download too for this trade. So symbol, we're long on this. The target price I've got typed in here, 26.50. Whatever price you get into it at, if you're going to take this trade, you can simply type it in here. Whatever the open is. Friday's close was 24.52, so let's type that in. And then the stop price is currently set at 23.12. And then whatever account size you're trading with, it doesn't matter. You just type it in. And then I use the 2% risk, but you can certainly change that. And this is what percent of the account would be lost if the trade hits the stop. You can change it to 1%, you can change it to 3%. But what it does is calculate the number of shares to trade with to follow my risk control guidelines, and it tells you how much capital you would have in the trade. And that's not what percent of the account are we trading, but rather if the stop were to be hit, what percent of the account would be lost. And of course this changes as we type in a different account size here. So that's available if you want to follow my risk control guidelines. So again, there's the trade, UNG, U.S. Natural Gas Fund. When I was talking about this trade in the trading room, a few people said, hey, it's summertime. Isn't demand for natural gas drop off? The price of the commodity isn't necessarily driven by demand. There can be a lot of other factors, but in terms of a demand picture, natural gas, residential use of natural gas is only about 20% of the total volume. Most of it is in industrial, commercial, and energy production, and natural gas demand is driven up in the winter and in the summer, as in the summer when the demand for air conditioning starts to peak. And so we're just getting into that. So there's a bit of a seasonal fundamental case. I'm a technical trader. I'm going off of the technical indicators here on the chart, but it's always comforting and helps with confidence in a trade to know that there is a bigger picture story around it that makes sense. So there's the trade that I like right now for new entries. And of course, I'm sharing what I'm doing. Each individual needs to make their own decision. I don't know your circumstances, your trading style, your tolerance for risk. So, of course, I'm not giving financial advice. I'm not recommending you take the trade. I'm sharing a trade that I currently like and I am taking. If you do decide to participate in the trade, I hope it goes well. But we do have to realize any trade can fail. This trade can fail, and that's why I emphasize so much and provide tools for risk management. So if it does fail, the loss is controlled, it's tolerable, and we move on to the next trade. Well, trade safe, have fun. Let's keep the winners big, the losers small. Regardless of what this trade does, the system that I'm using has proven to be profitable over time. All right, thanks.